100 million, 300 million, 500 million, 1 billion. What if you could receive 10 million KRW every month without doing anything? Time to head to the Maldives and enjoy a mojito. Among the many ways money makes more money, today we'll explore how to generate monthly income through dividend investments with AI's analysis. Is it as simple as investing in high CO dividend stocks? Yes, it's possible. But it's risky. Dividends can decrease and your principal can vanish. That's why today we asked AI to build a stable and consistently growing dividend portfolio. How much capital is needed to earn 10 million KRW per month in dividends? Let's break it down based on different dividend yield scenarios. One dividend yield of 3% requires nearly 4 billion KRW in capital. Unrealistic for most people. Two dividend yield of 0% requires 2.3 to 2.4 billion KRW. Still a large sum. Three dividend yield of 7% requires 1.7 billion KRW. Becoming more feasible. Four dividend yield of 10% requires 1.2 billion KRW. But higher yields come with greater risk. So, what should our target dividend yield be? A stable dividend portfolio typically aims for a yield between OESO 7%. Thus, a realistic goal is to build a portfolio worth 1.5 to 1.9 billion KRW. How to choose the right dividend stocks. AI's best dividend portfolio. To make 10 million KRW per month purely from dividends, what stocks should we choose? Based on the latest market data from March 2025, let's build a stable dividend portfolio. One dividend growth stocks. These companies pay steady dividends while offering stock price appreciation potential. Dividend growth portfolio. Johnson & Johnson, Procter & Gamble, Coca-Cola, PepsiCo, McDonald's, Microsoft, Apple. These stocks may have lower initial yields but consistently increase their dividends, helping long CO term wealth accumulation. Two highest dividend ETFs. ETFs reduce individual stock risk while ensuring stable dividend income. Highest dividend ETF portfolio. Schwab Dividend Equity, ETF SCHD. Vanguard High Dividend ETF VYM. JP Morgan Equity Premium Income ETF JEPI. Global X Nasdaq 100 Covered Call ETF QILD. Global X S&P 500 Covered Call ETF XYLD. These ETFs offer stable dividend income and long term growth potential. Three highest dividend REITs. Real estate investment trusts. REITs provide monthly dividend payments and steady cash flow. Highest dividend REIT portfolio. Realty Income O. Agree Realty ADC. KRW WPC. Stag Industrial Stag. Although real estate markets fluctuate, these REITs provide stable long-term dividends. Four BDCs and MLPs, highest yield but risky. Business development companies, BDCs, and master limited partnerships, MLPs, offer high dividend yields, but they are volatile assets. BDC and MLP portfolio. Main Street Capital. Main dividend yield, 7.1%. Aris Capital ARCC. These stocks offer high dividends but require periodic rebalancing due to their sensitivity to market fluctuations. Expected annual dividend income and risks. With this portfolio, you can earn an estimated 90,000 to 100,000 USD annually, which translates to over 10 million KRW per month. However, remember the risks. Dividend cuts. Companies can reduce or eliminate dividends during downturns. Interest rate hikes. Rising interest rates can negatively impact REITs and high-SO yield stocks. Market volatility. Stock prices fluctuate, affecting your total return. So, how do we maintain a stable dividend portfolio while minimizing risks? Key strategies to maximize dividend income. 1. Reinvest 50% of dividends for compound growth. Do not spend all your dividends. Instead, reinvest at least 50% to maximize compounding effects. For example, at a 7% dividend yield, reinvesting dividends annually could double your capital in just 10 years. 2. Balance highest dividend stocks with dividend growth stocks. Only investing in highest yield stocks is a mistake. You must also include dividend growth stocks to secure long-term growth. For example, Microsoft and Apple dividend growth stocks. Realty Income and JEPI highest yield assets. This approach ensures both stable cash flow and long-term asset appreciation. 3. Regular portfolio rebalancing, every 6 to 12 months. The market constantly changes. Interest rates, economic downturns, and company earnings all impact dividends. That's why rebalancing every 6 to 12 months or during market disruptions is critical to long-term success. Final takeaways: building wealth with dividends. Reinvest at least 50% of dividends to maximize compounding. Diversify between highest dividend stocks and dividend growth stocks. Regularly rebalance your portfolio to adjust for market changes. Conclusion: achieving financial freedom with dividends. Today, we explored how to earn 10 million KRW per month through dividends. From dividend growth stocks to high SEO dividend, ETFs, REITs, and BDCs, we built a portfolio that balances stability and returns. But the key to success lies in a strategic approach. Reinvest dividends for compounding growth. Combine growth stocks and high SEO yield assets for optimal balance. Rebalance your portfolio regularly to mitigate risks. By following this strategy, achieving financial freedom through dividends is possible. Don't have 1 billion KRW in capital yet? Neither do I. That's why I'm investing step by step, growing my capital over time. Think carefully. If you don't start now, you might still be struggling with the same worries over 10 years from now. Want to sip a mojito in the Maldives? Now is the time to start. For more investment insights, don't forget to subscribe and like. Oh, by the way, this channel uses AI to analyze money, technology, and human behavior. Our insights into the future of finance will keep coming your way. Wishing you a successful mojito.